Well, yeah, it provides a builder, right, or the borrower with an opening for cash flow, right? How many times have you talked to someone or your network here says, "Oh man, I wish I could buy that house, but my money's tied up
Yeah,
on this
all
fix
the
and
time.
flip," right? Well, if you don't have a $5,000 bill every month for 12 months, right? That's 60K. You have 60K available. You can go ahead and buy that house down the street
Yeah,
for
that's
50 grand,
remarkable.
right?
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, folks, welcome back to the show. Today's guest, Edwin Arocho, has a team with Movement Mortgage. He also is with Axios, and they do fix and flip, new construction, multifamily lending as well. And so really active across multiple segments. And he's based out of New Jersey. Edwin, welcome to the show.
Thank you, Dylan, for having me. Thank you very much. Super honored to have the opportunity to speak to, your network and your tribe and provide some value hopefully today. Yeah.
Hey, I appreciate you coming on here. We had a conversation a week ago, which I'm recalling, and you're based out of Verona. I grew up just one town over in the Caldwell, so it's really amazing to make this connection with you here today, because now I live in Santo Domingo in the Dominican Republic.
Yeah, that's it. And it's funny because a lot of people think I'm Dominican, right? So it's well, it's what.
Well, look at that. Uh,
So
I always like
wow, for full 360, we did a whole circle, right?
full
Yeah.
360. I always like to start off at the top, Edwin, by asking guests, how did they get started in real estate? In your case, how did you get into the mortgage space and then later the lending space?
Yeah, yeah. I think anybody who's been in the business for maybe 20 years or so will say the same thing. You get into this business kind of by accident. Right? So 20 years ago, 'cause I've been doing this 20 years. So 20 years ago, I was in my 20s, in my early mid 20s, and I was a personal trainer. I was working a lot of crazy hours, and I was always also working at a retail furniture shop. I mean, I was working probably 80 hours a week, and clearing a nice a lump of money. But at the time, I was feeling burnout, and I'm not even 25 years old yet. So I went out to this restaurant, and a buddy bumped into me and said, "Eddie, what are you up to?" I'm like, I gave him the whole sob story, like, oh, this, that, the other. My girlfriend hates me. I'm working all these hours. I feel like I'm making good money. He's like, He goes, 80 hours. He goes, I think you could do that in about 30. And I'm like, okay, well, what do you mean? He goes, you ever hear about the mortgage business? I'm like, yeah, my old man has one. Right? Like, I didn't know. I'm a personal trainer in the gym. What do I know? Right. So, it was one of those situations where I was like, show me your paycheck and I'll go meet your bosses. And that's what he did. He showed me his paycheck. I went to meet his bosses. He goes, Ed, you're calling people out of the yellow pages, right? And persuading them to come into your gym. I go, yeah. I go, well, here are people who actually have a need. They
Yep.
have a high interest rate. in the sevens, eights, and nines, and we're facilitating a service where you could drop them into the six, fives, and fours.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
I'm like, oh, so they have a need? Give me the phone. Let's give me the short form script, and I never turned back. And I've been
What
through
years were you getting active? When was this time period when you were going?
2000 and 2004, 2005.
Okay, so you
So
got in when it was red hot, but then you also a
yes.
couple of years later saw an entirely different uh, shift happen when you had the housing crisis. I want to ask you about that time frame, 2004, 2005, though. So you're making the transition. You're going from personal training into the traditional mortgage space. At that point in time, were you basically diving in feet first? What was the transition process like from one business to another?
Well, I had really good mentors at the time, right? Between my father and the owner of the gym, which was the Gold's Gym, which was probably the largest gym in New Jersey at the time. So I had a really good sense for being a people person and understanding people's wants and needs and then addressing them. The difference was learning the vocabulary, right? Hey, I have a want and a need. The want and a need at a gym is I want to lose weight. I want to get ready for a wedding. I want a boyfriend or I want a girlfriend, right? I need to look better, right?
Yep.
And you facilitate tools in the form of trainers and diets and supplements to help that person reach that goal over time. So it did take about a year or so to get the vocabulary down and understand how the mortgage vehicle works. And it's not a debt, right? It's a debt management tool that allows you to build wealth over time, and then just understanding that vocabulary and being able to talk at a high level to not only homeowners or home buyers, but also CPAs and financial planners. So that took me uh, uh, about 12 months to get it, but to be really, really good at it, it was about 36 months or so of
So,
growing into it.
oh 05, oh 06, that time period, it's and maybe oh 06, you could start to see signs, but it's red hot at that point in time. So are you thinking when you're getting in like, hey man, this is great, this is easier? Were you thinking, there's a big learning curve here? What was the thought process at that point in time as far as, hey, there's something for me here long term?
Yeah, yeah. I've always gravitated to wanting to be some type of a servant leader. I guess because I went to a preparatory school. I was raised Roman Catholic, and communities first. So when I got into it feet first, I felt it wasn't as hard as calling some random person from a yellow page, right? Because the communication was, well, yeah, I have a need, right? Versus making somebody think they have a need and then pushing them into an opportunity to transact. Here it was like, hey, so in that sense, it was easy, but the work was just as hard. I mean, I was already used to working 80 hours. Some of those guys, my God, the guys around me who knew the business for a really long time, they were in their 20, 30 hours and they were done. I decided to work 60 hours, a
Yeah.
week because I didn't have any children and I didn't have any responsibilities and I was still at home. So that part was great, right? Just being able to work and earn and actually see these paychecks come in and go, okay, I'm valuable because I'm providing value, right? So that was the stick that kept me stuck in this business, even through all the turmoil
And then,
that transpired.
2008 hits. I've spoken to so many people in the traditional mortgage space on this show. 2008 hits, and you basically see a max exodus. And there's people who were there pre 2008, and then there's everybody else who survived that time period. What was it like? You're in New Jersey. What was the environment like in New Jersey? Were you seeing people leave the mortgage space? How were you able to get through that time period? Did you pivot your business?
Yeah, so So it was brutal, I'm gonna say. It was really brutal.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Because at the time, 2007, 2008, we were I was responsible for a telemarketing team, right? So I went from this guy who doesn't know doesn't even know how to spell mortgage to running a team of telemarketers of 50 with 100 loan officers. And then I feel like overnight, which really was probably like a span of a year, we were down to the two owners of the company and me out of 150 employees. So it was brutal.
Wow.
It was brutal. And I stayed with the owners because they gave me so much, right? They didn't have to take this guy who went to a preparatory school, who stopped going to college, who was a personal trainer, an opportunity to do this, right? So I felt a certain sense of loyalty to them for
Sure.
allowing me the opportunity to understand this financial vehicle, right? That drives the U.S. economy at a very high level.
Absolutely.
And so I stuck with them, but it was bad. It was to the point where I was studying again. I was like, I'm going to school part time, and I'm gonna become a nurse. Yeah, I mean that's how rough it was. Thank God I had a very strong girlfriend at the time who's my wife now, right? And she was just like, just stick with it. This is just a thing, and there's no way that this is gonna turn around. So we did. I stuck with it. I stuck with the original guys who brought me into the business. And by 2010, we had pivoted to a direct to consumer model where we were helping a lot of people refinance and help the individuals who were starting to see a little bit of equity build up.
Yeah.
Hey, let's get you out of that nasty thing. Let's get you out of this, hole. Let's have you assist you in selling this house and kind of putting you something else. So it was a little bit of a waiting game from '09 to 2000 and from '08 to 2010. But those were really tough times. You're not making your car payments. You're missing mortgage payments. You're going bankrupt, right? Like all these things happened, right?
Yeah.
And
Yeah.
a lot of people are like, no, it didn't happen. Yes, it did happen to all of us.
Yeah. Yeah.
Every one of us. I've seen individuals. There was an implosion meter, so every day you can go online and see how many banks were falling off and just unable to perform because of the level of disarray that the whole industry was in.
Going through. That
Yeah.
time period was so challenging for all of those reasons. And then you're having to basically search deep and say, hey, do I want to, be a nurse? Am I going to stick with this? Like, what's the next steps? And when I talk to people going through this, it's a lot of, faith. It's a lot of other people coming in and saying, hey, stick with this. There's something here. At that point in time, so 2009, then going into 2010, was the investment space, was working with investors, fix and flip, new construction, multifamily. Was that on your radar at all?
So that didn't hit my radar till about 2011, 2012, and I started getting involved with like a lot of the REO space. Right? Where, wow, okay, now like these REO, all these properties that are owned by banks who foreclose on all these families because of the turmoil now are opportunities for investors to come in, fix, flip, and put other people into those properties. And that's when I got enamored with the whole, wow, maybe we could pivot from direct to consumer where we're asking people to refinance to now let's start building relationship with agents who have access to investors and start assisting investors with the opportunities to fix and flip with better terms and and experience-based lending versus this whole, well, let me see your personal financial statements. Let's ask you for all the data that we need to get you so frustrated that you don't want to do business with us and go somewhere else, right? Which is what the big banks do because they're trying to protect their assets and their liability and mitigate risk, right?
Sure.
So So I would say 11, 12 is when we pivoted to, hey, okay, this direct to consumer thing works, but it's not a long-term play. We got to get into the purchase. We got to get into the investor space because
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
the mindset of an investor is a lot different than maybe a first-time home buyer in the sense that they understand balance sheets
Yep.
right more efficiently. They have they have other properties, so their real estate financing IQ is higher, and those conversations go a little bit smoother, and it's pretty much black and white. Hey, you have a need. Here are your options. Here's the bottom line. Let's go. And we find that with our competency level, that our opportunity to converse with a builder, a developer, and a contractor usually goes a lot smoother than, a first time home buyer, or somebody who's trying to put together $30,000 to acquire their first home.
I want to ask you because I'm seeing a trend now. I'm licensed in Texas. Um, I'm seeing a trend now in new construction. It's a little bit more challenging in some areas, specifically DFW, for
Yes.
for some smaller flippers because you're seeing so much new construction that people want to buy new. They can get better rates. They can get almost the same price of home, if not the same price of home as they could get pre-owned. So because you've been active in both of these spaces, have you seen that, hey, when one space may be, slightly bearish, when it may be slightly down, like what happened in 2008, you're then having another space where there's tremendous opportunity, like there's more homes going to foreclosure, so working with investors. Do you think that there's, maybe a big opportunity for folks who are hyper focused in one area, let's call it the traditional mortgage space, to look at, working with investors as a way to, you know, create some level of diversification in what they're doing in case the market shifts?
I would. The hard answer is yes, right? I think anyone who wants to survive over the next 10 to 15 years with AI coming in, AI will be able to do a lot of what your traditional retail lenders are doing. Have a conversation with a client, provide prescription, allow client to pick their program and move on, right? Where on the investor side, it's a little bit more relational. You become less of a commodity and more of a value add, right? So I think going into the investment space is super important. And the retail side, I call it the retail side or the traditional lending side, they're very, very stringent, in regards to their guidelines and how they do things, where when you're dealing with institutional banks, hedge funds, private equity, they're using algorithms. Those guys are super smart. Like they take calculated risks, and those risks, they know they're not even risks. They're like, we calculated it. It's not a risk, right? So just access to funding is easier on the investor side, right? So I would say for any professional that's listening, yeah, I would definitely diversify yourself on the retail side, on the traditional lending side, and really uber focus on the investor side, because there are the investors out there that we talk to all the time, especially new investors, right? Hey, I got 100,000. Hey, I got 150,000. I just did my first flip. I'm gearing up. I want to do 5 more. Okay, great. Those are individuals that we love to talk to because they're kind of like first time home buyers. They're excited. They kind of have a little bit higher sense of financial acuity, and we're able to really have a good conversation with them and say, let's team up together and work on putting this deal together for you, right? And we have this plethora of options to share with you because there are so many institution, no banks and private equity and hedge fund guys who have the money, and they're like, we want to get into this game also because BlackRock's in it and these guys are in it and Blackstone and State Street are in it. We want to get in it too. let's go. And then they use us as those conduits to build relationships with networks such as yourself to be able to get in that space. So again, that was a long answer, but
No,
yes,
yeah. It,
diversification. Investors, developers, and contractors are the equivalent of a real estate agent, appraiser, and a real estate attorney on the retail side.
as a realtor, what I've noticed is the investor world is almost separate from the retail side. So,
Yes,
as
that's
a
on
new
purpose.
realtor coming in, you might be thinking, well, how do I like where are these investors and how come I'm not coming across them? It's because it's two totally different worlds. And actually, on the
Yes.
retail side as a realtor, I've almost gotten the sense that there's brokerages who like don't want you to work with investors. I don't think they'll come out and say that, but some of them probably would. I remember being in my real estate school, which I loved going to in Fort Worth, and kind of getting the sense like, whoa, uh, people kind of have a not the best connotation tied to like wholesalers and creative deals, and so many investors are going about it that way, and that's the world that I had come from. So I want to ask you, for folks who may be in the traditional space or just getting started, and they're thinking like, well, how do I get into this fix and flip new construction? I don't know anybody in that space. What advice could you have for them? Is it separate circles? Do they have to, pay to get into rooms? Do they have to go to a certain other groups?
Yeah, yeah, all of the above, Dylan. All of the above. You have to get. I would say the first thing is to get educated, right? Understand, what investors go through, what investors are looking for, and what they need. The only way you're going to do that is if you pay to get into certain rooms. So become, get involved with a builders network, an investors network. There are a bunch of them on Facebook and Instagram that you could join. As long as you don't promote yourself too much, and a lot of them, there are boards like realtor boards or real estate boards. They're builder and investor boards. Join some of those. When you're do what we do when you're driving by to go to Whole Foods, right? And you see a new construction going up. Take a picture of the builder and call the builder and say, "Hey, I'm a realtor, in the area. I would love to, learn more about that property you're putting up and maybe try to sell it before you're done with the work, or assist you in finding another deal just like that." Right. So, right. And then for us in the mortgage industry, the retail mortgage industry wants you laser focused, only worrying about retail, refis and purchases. They
Right.
don't want you getting involved with investors and developers and getting involved with all that, because the margin for profit from a retail side is very low. But when you're acting as a broker, the margin isn't low because you have no overhead.
So once you get involved in that, you might not come back as often to the
You might not come back. Now they lose a breadwinner, right? So it's systematically done like that on your side and on my side, on the mortgage end for sure.
I want to
Yeah.
ask you about the multifamily space. So
Yes.
Axios Mortgage, I believe, is the name, right?
Yes. Those are brokerage.
Involved
Yes.
in fix and flip, new construction, multifamily. This is new to me because I've actually come across many folks on this show who've been looking for multifamily funding, and it's not easy to come by. So you might be able to go to a bank if you have a good relationship with a bank, but I've been familiar, of course, with hard money lenders in the 1 to 4 DSCR space, but multifamily offering is different.
Yeah, multifamily offering is different. And when we say multifamily offering, when you're dealing with a retail independent mortgage banker or big box like Wells Fargo, Bank of America, they don't want multifamily flipping going on, because their internal SOP, right, standard operating procedure, kind of puts them in a position where it's kind of like they may be breaking their own rules, so they rather just not do it or make it really hard. For instance, hey, I'm purchasing a property. I'm doing a 5 unit. We're doing a 5 unit right now. I'll give you that example. A 5 unit. If you go to a Wells Fargo, Bank of America, or Capital One, hey, I want to purchase a 5 unit. They're going to go where our box is. If you're purchasing a 5 unit, it's considered a commercial space now. So we're going to need you to put 30 to 40% down.
Mm.
That might put a lot of people like, whoa, 30 or 40%. I
Yeah.
wasn't ready for that. I was ready for 20% or 25. No, well, it's a commercial space, and because of that, this is how we look at it. Now, when you're dealing with a broker with access to private equity and hedge fund, like us at Axios, or even our own line of credit, then you're looking at things like, well, I want to purchase a 5 unit. Well, we'll treat it as a normal residential unit as long as there's no businesses in there. It's not considered conventional. As long as the influence is residential. Now it's not considered commercial. It's considered residential. The premium of the interest rate will be slightly elevated because of that fifth unit, right? Because that's just the tranche that it falls into. But yeah, let's go 25% down. You good with that? Well, yeah, this guy just told me 30 and 40 and 50%. Okay, great. Let's do the work. Come on. You're not going to be happy with the interest rate until you've built enough of a rapport and a portfolio with us to be able to say, okay, now 5 years from now, we're going to get you out of this, residential style loan, and we're going to go DSCR into a hold, or you're going to sell, or now that you have your financials in place, now let's take that personal financial statement, let's take your credit, and now let's present your 5 years in the business in this space, holding this asset, and now let's go get you a better term and a better rate with a big bank.
Right. And what you're doing with Axios is vertical integration, really, because you're having folks who may be like fix and flippers. They may say, hey, we're moving a new construction, but they may also be looking at multifamily or have an eye on multifamily. With most others, they're going to have to go somewhere else because they're not going to handle, ground up new construction, developments, multiple homes, right? And they're not going to handle multifamily. So they're able to really scale in their business and then into other asset classes as well through Axios.
Yes, 100%. I'll give you an example. I was on our retail side. I call on realtors like you all day long, even though I own the place, right? Um, and there's one realtor that I've been calling for almost 3 years. Every month, hey, like, come on, let's go get some coffee. Let's go get some coffee. And 3 months ago, he goes, I'll get some coffee with you. Right. And we start talking. I'm like, yeah, I'm excited. I got this Axios thing going, and we're pumping it up. And he goes, listen, I'm into the ground up construction thing. I go, my wife and I just started our own real estate firm. I'm like, oh, I didn't even know that. Like, I didn't even know that. Right. Like, how did I not know? How did I miss that? We're talking to you. And he goes, we're really fixated on ground up construction. Like, that's what we want to do. And I was like, well, I just happen to have Axios, and we just happen to do ground up construction really well. And here are the two main characteristics. And this is what, two main characteristics just to share with you, though. Ground up construction, you always have a down payment, and you always have a monthly interest payment, right? With majority of the time. If your ARV is within 70% or so, we'll take it to 75, and we'll put all your interest reserves toward the back of the loan, so you have no interest payments for the entire term of the construction.
Hmm.
So that alleviates a lot of stress to builders and allows them to create cash flow to go get another deal.
That is huge. So I've never heard of that before. So
Yes.
that's pretty uncommon, right?
It's extremely uncommon. Usually the interest reserve is required by the borrower. So, hey, I don't want to pay interest payments. Then some banks will say, well, the total interest payments for the term is going to be 150,000. If you don't want those payments, give us 150,000 and we'll put it in an escrow account and it'll sit there. So it's still your money locked up, but it's just you're not worrying about the payments. You've gave them one lump sum that's in jail. That's usually what the bigger company banks do. What we're saying is we have a hedge fund
Mhm.
that owns a bank that we have a line of credit with that says we'll put all these payments toward the back of the loan. Just make sure you close on the term time.
Are they still making some payments monthly, or can that be postponed until when
So the monthly payments are postponed. That's what it's, yeah. You have no monthly interest payments on both the ground up construction side and the fix and flip side.
That's huge. I've never heard of that before. So when people talk about holding costs, right, and holding costs and things are getting straight, uh, it's making it difficult. Now they're having to look at bridge loans and certain things like this. This really addresses a lot of those issues.
Well, yeah, it provides a builder, right? Or the borrower with an opening for cash flow, right? How many times have you talked to someone or your network here says, "Oh man, I wish I could buy that house, but my money's tied up
Yeah.
on this
All
fix
the
and
time.
flip," right? Well, if you don't have a $5,000 bill every month for 12 months, right? That's 60K. You have 60K available. You can go ahead and buy that house down the street
Yeah,
for
that's
50 grand,
remarkable.
right? The other thing that we did was it's 100%. We do 100% of the build. Other lenders, they'll give you a really good rate, but it'll be 90% of the build or 80% of the build. And we do a true 90% LTC, loan to cost ratio. And some of your bigger banks won't go that high either. So it's either 75 ARV or 90 LTC, whichever one is lower, right? So we have a staff that looks at your experience level, vets you, and then we look at your scope of work and say, hey, we want to give you these draws, but maybe go heavy on the first draw because you're going to have this trickle down issue if something happens with the scope of work that you're doing. And then
Right.
let's go lighter on the draws in the future. So we have an entire team of dedicated professionals who only focus on this. And I think that's what makes us different is that most lenders are not built the same, right? And because we have the flexibility of Axios having access to several lenders with teams, we're able to provide that additional service that most lenders can have to say, hey, you're gonna have to go somewhere else. We'll go.
Yeah.
You're gonna have to go to a community bank, but we'll present you the 2 or 3 community banks that we feel will put you in the best position possible to do this, because then you lose the opportunity to serve, right? And the whole point of this business is to continue serving, so you can continue getting referrals, so you can continue your wealth building process through your lending practice. And that's
Yeah.
overall what our focus is.
Yeah, yeah. I mean, when I think about everything that you're doing over there, a lot of a lot that I have not heard in the segments that you're involved in, especially the vertical integration between fix and flip to multifamily, but then also being able to delay those payments. It's almost unbelievable. I've never heard that before because that eliminates such a big burden that the builders are having to go through and flippers are having to go through. We are coming up on time here, though. I
Sure.
do want to ask, where can folks go to learn more about Axios, to learn more about Movement Mortgage as well? How can folks get in contact with you and your teams?
Yeah, yeah. So I would say, look me up on Instagram. I'm the REAL lender. So the real lender is a play on words. The real lender on Instagram. You can find us at just Google me Edwin Orocho, and I'll pop up from Movement Mortgage, or use Edwin Orocho at Movement Mortgage, and I'll pop up. I have a branch in Montclair, so I'm easily located, or you could just go to Axios Mortgage LLC.com and look us up there. You'll see, 2 studs. I'm not one of them on there who are my partners, and they help tremendously put together, this strong foundation that we have, facilitated around relationships. This is what it's all about. It's just building relationships. So if you're an investor, check out Axios Mortgage LLC. If you want to talk to me directly, I'll give you my number right now. It's 518-947-9019, or just look me up, Edwin Orocho at Movement. Let's have a chat.
Edwin, thank you so much for coming on the show today.
Oh, my pleasure, man. I'm looking forward to more of these opportunities with you.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.